thanks for joining and participating in this investor meet. So I'll just introduce the team over here. We have our MD, Mr. Subhrakant Panda, our CEO and whole-time director, Mr. Vijayan Mahapatra, myself, Shravana Gupta, the CFO. Suresh Babu heads the Ferro business, and Sandeep heads the mining business, and Sanjit is the EA2 MD.
Okay.
So this is the team from our side. So today we'll be briefing you about our company, but as I said, we request you that as per the SEBI guidelines, we have to record the whole proceedings of today's meeting and also upload. So we have to only share, or we'll be only sharing whatever information is there on the public domain. So nothing about anything which is UPSI related or Q1 results, because our Q1 result will be declared on 30th July in our board meeting. So we can discuss about it only after that.
Sure.
So everything will be related to the previous numbers or whatever is in the public domain that we will share it. So that is the briefing over there. And over to MD for giving us the overview of our company.
So thank you once again for taking time out to give us this opportunity to familiarize you with IMFA. And so we'll just take you through the presentation. So as you may be aware, IMFA is India's leading producer, fully integrated producer of ferrochrome, and we are a trusted partner to stainless steel producers worldwide. And by fully integrated, what I mean is that we have the two key inputs, which is chrome ore and electricity, in the captive domain. Vishek.
Yes.
Next.
Next.
Yeah. So it was founded by my father, Dr. Bansidhar Panda, in 1961. Today we account for approximately 25% of India's production of ferrochrome. Actually, probably currently that might even be a little bit more, because several other producers have cut back production, but we have gone with what has been the sort of average over the recent past. We are net debt free, and in fact substantial cash reserves which we are going to deploy towards expansion, with our core business expanding by 40%. We have started work on a 100,000 tons per annum ferrochrome plant. And we also have in principle approval for phase 2, which we will take up thereafter. We propose to take up thereafter. We are also doing diversifying into ethanol, and I will get into a little bit into the reasons why later on in the presentation. And of course, we are listed on both NSE and BSE. So the leadership team has already been introduced. We also have the power business unit headed by Binoy Agarwal, who's not in the room today. But the forward-facing business, which is ferroalloys, is obviously the revenue generator, and mining is the most critical input into, as in chrome ore is the most critical input into our production process. So next page. So what fully integrated operations means is that we are cost competitive. We are not exposed to fluctuations with regard to chrome ore, and like other commodities, chrome ore prices can also be quite cyclical. And moreover, as one is seeing in India at the moment, that non-integrated producers are suffering on account of reduced availability of chrome ore. So none of that is relevant for us, and that has helped us establish relationships with leading stainless steel companies in India and around the world. We have just listed a few, but we sell to others as well. So our current production capacity is 190 MVA. Which is capable of producing 284,000 tons per annum, and in FY25 we produced 260,000 tons approximately, give or take. I mean, actually slightly more than that, but we have listed broad number. The environment clearance that we have for mining is for 1.2 million tons, but this year we have mined 0.7 million tons, FY25 I should say, to be very specific, and we have in fact crossed the 7 lakh ton mark for the first time. So we were roughly at about 6 lakh tons for several years, and in leading up to our expansion, that is where we are slowly going to increase our output, going up to 0.9 million tons or 9 lakh tons in the first phase, and ultimately 12 lakh tons or 1.2 million tons. So our existing power generation capacity is largely coal based. So we are 200 megawatts out of 204.5. And 4.5 megawatt peak is the solar capacity that we have at the moment. but we have tied up with two leading renewable energy companies, JSW Energy and Ampin, to put up 110 megawatts. So one is 70 with JSW Energy and 40 with Ampin. So adding up to 110 megawatt hybrid renewable energy. So this will go primarily into our expansion. So we are pivoting towards green energy. But in order to be compliant with regulations, part of this will also go into our existing operations. So the growth that I was referring to is phase one, which is under implementation, is 100,000 tons, 2 furnaces, and we are planning to commission middle of next year. Furnace 1 by June 26 and the second one by September 26. That's the plan and on target at the moment. As far as phase 2 is concerned, that's roughly 200,000 tons per annum, and it's only an in-principle approval from the state government. So land allocation, etc., is not there, and we will pursue that. But we are also looking at other opportunities, possibly of how we can fast track that. But for the moment, phase 1 being implemented and phase 2 in principle approval is available.
Just 1 second. The phase 2, it's not in the same land parcel of.
No, it cannot be in the same.
Okay,
it cannot be in the same land parcel. We may be able to put up. So phase 2 will be roughly about 3 furnaces. We may be able to put up 1 in the existing land parcel, but we are looking at other options in Kalinganagar area in terms of land parcels and or other means to expand capacity. The key point here, Harish, what I wanted to emphasize is that growth plans are there. It's a question of whether we stick to a pure organic route or we look at other opportunities. But either which way, we will be doubling our ferrochrome capacity in the next few years. Chrome ore, as I mentioned, 0.9 million tons. We'll go up to 0.9 million tons by FY28 to meet phase 1 expansion, and then go up to 1.2 million tons to meet the phase 2 expansion. And power, of course, we have highlighted the 110 megawatt hybrid renewable, which is coming online by before June next year. The capex of the running projects we have shared here. So 900 crores towards phase 1, 1,000 crores which is for Sukinda underground project, and that will basically meet. We are that is spread over several years, where it will take us to 1.2 million tons, because you have to design the underground mines, for maximum, max peak output from the very beginning, because you can't, change the dimensions of the shaft and other things. And 150 crore, which is a small outlay towards ethanol, and again, ethanol is covered in detail later on.
Okay.
Harish, there is a hard copy of the presentation.
Same, what is being displayed. Perfect.
It's uploaded on the on the stock
also.
exchanges, as well as we'll be giving a hard copy.
And website also it is there.
Sure.
Yeah. So ethanol. Let me start with the most important question. Why? Why ethanol? So that's actually the second point. We should have put that up in the up in the presentation. So clearly, ethanol is not really connected to our core business. And neither are we looking to jump into ethanol just because that's the fancy thing to do, with ethanol blending being very much in the news. But broadly, when Infra was set up, we were producing silicon alloys, and the main unit came up in southern Odisha, which was next to Bolangir, etc., for the quartz, which is the primary input for silicon alloys. But that being extremely power intensive, was not viable after a period of time. And so from early 2000 onwards, we have pivoted entirely to ferrochrome. And we have a significant logistical disadvantage at our Theruvali unit as compared to our Chodwar unit, which is the major capacity at the moment, and Kalinganagar, which is also coming up next to the port. So as a result of that, while we have surplus land, while we have bulk raw material handling facility, etc., but it doesn't make sense for us to put up further ferrochrome capacity in our Theruvali unit. So rather than, and eventually when enough capacity comes up on the, at other locations, we will be scaling back Theruvali. And therefore, given that we have the land, given that we have other facilities, we were looking at what is it that we can do which is somewhat related, because I think the one thing about ethanol is it is at least an industrial commodity. That's what we are primarily looking at the beginning. And because we can't really, just to make a joke of it, can't really diversify into FMCG or something of that sort. So we did a fairly deep study, and we believe that this is a value accretive investment where we are expecting about 300 crores top line and roughly 8 to 10% EBITDA. The advantage we have is land is already there, other infrastructure is already available, so it minimizes investment on any of all of those things. But what we are looking at is, certainly not a distraction from our core business. As I said, 150 crores is not a large investment that we are making, but we are exploring if we can get into downstream products based on ethanol, which will then really make it value accretive. But and if we are convinced about that, then what we intend to do is to then look at capacity expansion. But the most important thing I want to reiterate is that this is something that has been well thought through, will not detract from management time, and is value accretive. So that's the thought process. Shaunak, if you can explain the financial position. And
so as you can see, we have a very strong financial position now, and our last year's turnover was 2564.57 crores, whereas on EBITDA side we were 21%, even though the market had slightly contracted, but still we managed to maintain an EBITDA of 21%, and PAT was better than the previous year itself. So we did a lot of cost optimizations and a lot of execution efficiencies which we improved upon to give a better margin. EPS, as you can see, the last 3 years it is continuously increasing, and we are adding value to the stakeholders. And on the dividend percentage on the face value of the share, you can also see that we have been quite consistent in our dividend policy, and we have been paying it regularly in each year. And again, on the free cash flow, we have been raising. Last year it was 432 crores that has come out from the operations itself. So there is a consistent way of actually generating cash. So overall, the financial position is quite strong. We are very low on the debt equity ratio. It's about 0.14. And in future, we expect this type of flow.
So one point I want to straight away point out here, as you can see, there was a revenue contraction in FY25, and that was on account of slightly weaker H2, and in particular Q4 being quite a noticeable contraction. And that is on account of all the commodity fluctuation arising out of concerns, not just geopolitical issues, but also all the trade conflict which was beginning to build up. The good thing about us is that we mostly sell against long-term contracts, so our offtake is pretty much assured, and the pricing is reset depending upon the type of customer, either once a quarter or every month. Chinese market is monthly. Our other long-term contracts are in Japan and Korea are quarterly pricing. So, but what is important is that while there was clearly a contraction in Q4 of FY25, which reflected in a lower top line for the quarter, lower top line overall, and margins contracted in Q4. But what we had indicated then, and while it pertains to Q1, I'm consciously mentioning this because we had mentioned it in the public domain earlier, that the ongoing quarter we expect it to be more in line with our standard quarters, because Q4 was a bit of an exception.
Yeah, so that's on the financial position.
Suresh, on the responsibility side, sustainability side.
As our MD already mentioned about the renewable power, we are committed for the sustainability initiatives across our operations. So 75% year on year we are committed for the optimization of our emissions. That is the renewable power. Apart from this, in one of our locations we have already water positive. That means whatever the water we are discharging, we are extracting less than the discharge of our water. And we are committed for the reduction of the plastic waste by eco-friendly alternatives. And we have a strong environmental management plan and also the safety plan, where we have a zero tolerance for our unsafe acts and unsafe practices. By this, we are committed to protect our workforce and assets. And we are aligned with the GRI, that is Global Reporting Initiatives and Sustainable Accounting Standard Boards.
Here again we have shared the progression of stainless steel production globally as well as ferrochrome. But broadly, what I wanted to point out is that China is today and has been for the past several years the world's largest producer of ferrochrome. But they are a relatively high-cost producer as they're entirely reliant on imported chrome ore from South Africa, from Turkey, etc. So while they have certain advantages like metallurgical coke and other reductants being locally available, but ore being imported makes them a relatively high-cost producer. And if you look at South Africa, it has 80% of the world's chrome ore reserves and used to be the world's largest ferrochrome producer. But in the past few years, they have been eclipsed by China due to high power costs, which have gone up substantially over the last decade or so, and also significant challenges pertaining to inland logistics. And in fact, many of the smelters in South Africa currently are closed, and there were some of the leading producers have announced cutback plans, unless market dynamics change. Similarly, in the Indian situation also, there have been cutbacks. In India also, there have been cutbacks of output, and especially non-integrated producers have been impacted because of chrome ore availability constraints. So that's where I was mentioning at the beginning that while on average we are about 25% of India's chrome output, ferrochrome output, but I would suspect that in the last couple of quarters that number would have gone up, but because it's a one-off thing for the moment, we are not highlighting that. So next slide, please. So our focus is very clearly on creating value. We have worked long and hard to build on our fully integrated model, which is what makes us resilient to shocks in the system. So just to reiterate, there is nothing we can do about cyclicality. If prices move up and down by 30%, it will impact our top line and profitability. But we are practically the last man standing. So that makes us extremely resilient and competitive. We have focused on bringing down debt substantially, so we are net debt free. What we are taking into what Shaunak was referring to as a 0.14 debt equity, we have more than that in terms of cash balances at the moment. And even in the expansion phase, we will broadly, not cross something like 0.3, maybe 0.4 debt equity. So focused on being conservative, which is I think important in a cyclical industry. And we have a clearly defined growth path where the maximum focus is on the core business, and we are seeing how we can gainfully utilize certain assets which are available at our Tiruvallur plant. So that's where we are with the presentation, and we're more than happy to try and answer any questions that you may have.
Yeah, man. Since our fund is meeting you all for the first time, a bit of background also on the global ferrochrome industry per se. So want to understand what kind of growth rate it is there in terms of the linkage with stainless steel as the user industry. So you said some of the high cost smelters have been closed. So so what led to the price fall? In fact, apart from this trade tension, is there anything concern on the demand side? So we want to understand the global, or for that matter, import threats,
right,
which is there for every commodity.
So broadly, stainless steel is a very niche industry. As you saw, output is about 60 million tons worldwide, whereas carbon steel is in excess of 2 billion tons. So that gives you an indication of the scale. But it's a niche industry with very specialized applications. So when you're talking about marine and maritime uses, stainless steel is more resistant, corrosion resistant. Mumbai is one example where over the past decade or so, a lot of the public infrastructure now uses stainless steel because it is corrosion resistant. So one of the things with stainless steel is that the initial acquisition cost is higher. But if you look at it in terms of life cycle costing, that is the low maintenance, corrosion resistance, and easier to recycle. If you look at life cycle costing, stainless steel, ranks above carbon steel, and that is why, as an economy matures, there is a tendency to shift to stainless steel. So, as the Indian economy is growing and reaches a certain momentum, which we are there now, going ahead, one expects stainless steel to pick up, especially because stainless steel consumption in India is still quite low compared to China, compared to even, other developing nations. And if you look at China, look at the numbers of China, I don't recall the exact per capita, but it will be somewhere between 3 to 4 times of India. And therefore, you can easily take for granted that a doubling of ferrochrome, stainless steel consumption in India, and therefore ferrochrome requirement should happen, right? The other point to look at is that stainless steel, or rather ferrochrome, bulk of it, 95% plus, is used in stainless steel directly, and stainless steel has all the other applications that you are aware of. So this is, as the economy grows and matures, one expects the momentum to pick up. That is one. Q4 was more to do with a slowing Chinese economy, number one. So second half of FY25, if I can put it that way, a slowing Chinese economy, the tariff threats, etc. All of that caused disturbances. You had geopolitical conflicts. You had the Red Sea, piracy issue, disrupting transportation to some extent. So that sort of found its way into markets where broadly one saw that there was a little hesitancy across the world in terms of downstream investments, which is ultimately what will spur demand for steel, stainless steel, etc. But with some degree of stability now in terms of the US-China relationship, which is the most important factor here, as well as the Chinese, as the Chinese economy looking at measures to stimulate domestic demand, prices have picked up. But the other point I wanted to, if I were to analyze the transition from Q4 to Q1, and I'm being very careful about what I state because I can't get into details of Q1, but two things have happened, and I repeat that I'm stating what is there in the public domain. Two things have happened. One, that there is a little bit of stability in terms of the US-China relationship and all of that. Two, and included in that is the stimulus measures that the Chinese government has looked at. But more importantly, prices got to unsustainable levels. So our reported EBITDA in Q4 was about 12 to 13%. Our normal EBITDA is 20% plus, right? So I think the important, and we rank on the competitive scale in a manner that when we are at about 12%, 13% EBITDA, I think 12% EBITDA, 13, somewhere 12 or 13, something of that sort. So when we are at those levels, then half the industry, if not more, is underwater. So it had got to unsustainable levels, and therefore prices had to pick up. Otherwise, a lot more capacity would have gone out of action, and that would have been quite difficult then for the stainless steel industry. So I think as a company, two things I would say: that we are not a company that can be evaluated on a quarter-to-quarter basis. Quarter-on-quarter basis, you have to have a slightly longer-term outlook for us. Look at us in blocks of, let's say, 18 to 24 months types. Number one. And second, what should give a lot of confidence to prospective investors and existing investors is that Q4 was easily the worst we have seen in the recent past, including going back to the start of COVID, right? So if in a worst case scenario, we are looking at somewhere around 12-13% EBITDA and reporting a profit of about 44-45 crores in the quarter. And earlier what used to happen is when we came down to those levels, we would go, we would be sort of break even, and a lot of capacity would be underwater. But today, when other capacity is underwater, most of the capacity is underwater, we are at a level of about, let's say, profitable to a certain extent. and it immediately leads to a bounce back because those prices are not sustainable. So that is what really the last man standing is the best way I can describe our business model.
If you look at other commodities per se, they haven't dropped to that extent. So, what was the thing in terms of the ferrochrome?
So other commodities, if you look at, each commodity has its own cycle, its own dynamics to deal with, right? So stainless steel, one of the other questions you had asked is what is the stainless steel growth rate?
Yes.
Broadly, stainless steel has, if you look back at several decades, stainless steel has grown at about 6% CAGR, right? The difficulty is that it's not a straight line CAGR, it is, in spurts, and that happens. So there is always a lag, that is lag between stainless steel capacity and ferrochrome capacity, which is why you see the cycles in ferrochrome where prices shoot up, and then when capacity catches up, but by then stainless steel has sort of starts to slow down, then you see a fall in ferrochrome prices. So that has been there. But the specific question why stainless steel has reacted in this manner, there is a certain degree of overcapacity in China. You have had both US and Europe impose limits on imports. So because of all those concerns, I think until it will take some time. It is already beginning to happen in terms of the demand supply normalizing. That is where you are seeing the stress. But if you look at results for stainless steel companies in India, you would see the last couple of quarters have been on the upswing. So you can expect from that ferrochrome will start catching up with.
Yeah. The trough is past. They had a lot of issues 6 months back.
So there's a clear lag of 2 to 3 quarters between what stainless steel companies experience. On the upside, we will follow them later, and if a downside were to come, we will follow them later, not simultaneously.
That's because of this quarterly or monthly reset.
No, not just quarterly or monthly. It's also how the capacity catches up and all of that. And for it to there are periods of supernormal profit. If you go back and look at our data relating to FY22, EBITDA was 875 crores.
Even the steel industry did extremely well.
Right. That was so. We will always catch up a little later and ease off a little bit later. That's simply how. Because when stainless steel is on the upside and they are stocking material and all of that, that's when chrome prices shoot up, ferrochrome prices shoot up. But it takes time for reality to set in when stainless steel starts correcting in their cycle. It takes a little bit of time for that to pass through to chrome and steel. So the trough is past for stainless steel, as you said, and we are seeing we have had a little bit of correction in Q1. Q2 prices have also gone up by about 5 cents. The benchmark was Q2 as in the July to September, which is Q3, because worldwide stainless steel and pricing and all is done on calendar year basis. So for our Q2 financial year Q2 pricing, a little bit more improvement has happened in the benchmark prices also.
Okay. So because of this Chinese slowdown, have there been imports into India of ferrochrome from China?
So ferrochrome imports into India is minimal. Only some specialty grades which may not be produced here. But China itself, has a 40% export duty on ferrochrome. So even though they are the 40% or something of that, 40%. No? So even though they are the world's largest producer, there is no, and given their cost of production based on imported ore, fully integrated producer in India like ourselves will always be more competitive than them.
So as far as you are concerned, among the key raw materials, it's only the met coke that you will need to source from outside.
That's right. Yeah.
Also, I would understand, as far as domestic stainless steel industry is concerned, they are also having captive ferrochrome smelter plants. May not be ferrochrome ore as such, but to what extent they are able to cater from their captive vis-a-vis what they buy from people like you.
Okay. So specifically, I think the only producer which really has captive ferrochrome production is Jindal Stainless, where they are producing, to the best of my knowledge, about 20, maybe 22,000 tons per month. And they are by and large self-sufficient at, or little bit of buying from the market at the current capacity. But to the best of my knowledge, their ability to scale up ferrochrome production will be limited, whereas they definitely have plans to expand stainless capacity, right? So that is where we see potential for the domestic market. And there are other stainless steel producers who either have no captive ferrochrome production, or if they have some ferrochrome plants, which they, primarily a lot of them put up smelters to consume surplus electricity. So they were earlier on conversion with Tata Steel, and some of them are now buying chrome ore from Odisha Mining Corporation and OMC and producing ferrochrome, which is not competitive as compared to us. So our present market outlook, we are at about 90 to 95% exports, but our 100,000 tons capacity, which is coming up next year, we largely aim to direct that to the domestic market because we see the potential. Suresh, if you want to add something to it.
So in the coming year, when we are commissioning our new plant at Kalinganagar, we are focusing on the domestic market. So presently our export is around 95% as mentioned by MD. So the remaining is in small pockets of domestic market. But in the coming year onwards, we are focusing on the domestic market.
Okay. Who do you think will be the key customers here when Jindal Stainless expansion is one?
There are many stainless companies at a small scale also they are operating.
Okay.
And also
Smaller
special scales.
smaller
Smaller
compared to Jindal Stainless.
Yeah.
Okay. What kind of names? Maybe
Like Viraj Profile, Viraj Steel.
Okay. So for phase 2, you will
The
have
AIA
AIA Engineering
Engineering
also making a special alloys.
AIA Engineering. Okay.
And even your Sham and all are
Sham-
getting
Sham-
into stainless
Sham
steel,
is also
producing some
making it,
ferrochrome
yeah.
at the moment,
At,
but
indoor.
may not be.
Yes.
They're not fully self-sufficient.
So I mean, if you're reliant on, I can't really comment on the specifics of others in the field. But if you're reliant on bought out chrome ore, then by definition you will not be that competitive, because there's a clear delta between captive ore and the bought out ore.
Yeah. So on the chrome ore mines itself, right? So you have two mines. The expansion, I think you mentioned, is only in Sukinda, if I recall correctly.
So we have the Sukinda and Mahagiri mines. Mahagiri is entirely underground at the moment.
Okay.
And so we also set a record there in terms of ore raising from Mahagiri this year. And Sukinda, we are in the process of transitioning from open cast to underground. So let me ask Sandeep, because that's his daily bread and butter.
So we are having two mines. One is Mahagiri, it's totally underground mine, and another one is Sukinda mine. It's open cast mine. So now we are converting that open cast mine to underground. So since last 1 year, we have already given the major service contracts for that, and we are expecting to commission that underground mine by next 5 years. So that is how we are going to produce 1.2 million ton by FY31.
So Mahagiri, our capacity, our EC is 0.6 million tons. This year we did roughly 0.4. That's right, 0.4, right? And Sukinda, we had 3.5 lakh tons, so 0.35 million open cast. That will slowly taper off, and we also have EC for 0.6 million when we go underground. So when that reaches peak capacity, that is when we will be getting 0.6 million each from both of the mines, taking us to 1.2 million.
Okay. So by then, open cast will be completely...
Open cast
Yes.
will phase out over the next 4 to 5 years.
Yeah.
As far as expiry of leases, etc. is concerned for these two mines, so how does that work out? Is
Leases?
there a expiry year for these leases of these mines?
So we are having quite a long lease period. One is 2049, another one is 2055.
So Sukinda is 2049 and Mahagiri is 2055. And so basically, as you know, the policy changes which came about, which led to auction of captive non-captive mines or merchant mines as they are called actually. So those were, went into auction in 2020 largely. But the policy for captive mines is that if you don't have 50 years, if you didn't have 50 years, then you will get a 50-year lease. So our leases started in 1999 and 2005. Therefore, 50 years from that is 2049 and 2055. And even then, I mean, of course, that's quite a distance away. But even then, in the auction process for captive mines, there is a right of first refusal. So to be, to be very clear about the answer, the leases when they were granted to us initially were for a 30-year period.
Right.
So technically Sukinda is 2029 at the moment and Mahagiri is 2035. But as per the MMDR amendment, there is a guaranteed extension of 20 years. So that takes us to 2049 and 2055.
Okay. On the other players' expansion, would you be aware? I mean, globally, anyone is expanding again with the chrome ore as a backward integrated.
So the integrated model is really there in South Africa, but they are scaling back production or not added any fresh production, and whatever capacity was there, they are scaling back. Kazakhstan has its own ore, very specialized ore, and therefore very specialized grade of very unique ore, and therefore very specialized grade of ferrochrome that they produce. But they are not adding any capacity to the best of my knowledge. Turkey, again, limited expansion of ferrochrome, and China doesn't have any, which is where most of the expansion is coming, doesn't have any chrome ore.
So major expansion is carried out in India and done by yourself. Okay, that's quite peculiar, because stainless steel is growing, like I mentioned, maybe 6% or even higher, whereas the key raw material for that is not seeing growth.
Yeah, no, it is seeing growth. China is adding capacity. China is significantly adding capacity.
The prices need to support for them to.
But that's good for us, because we are clearly more competitive than a Chinese producer relying on imported ore, even though metallurgical coke is locally available. So the bulk of the capacity expansion is coming in places like China, where we are on any given day we are more competitive than them.
Okay. There's also a mention of ore prices, shot up during 4Q. So what was the reason? How is it currently?
So you're talking about in India as well. So internationally, if you look at the South African chrome ore prices, they had not shot up. They were more, they'd increased a little bit, then have slightly corrected, because it was all in anticipation of. See, that's the peculiarity if you are a non-integrated producer, right? That you have to decide today that, because there is a cycle between when you buy the ore and when you get delivery of it, and market conditions what they are. So based on expectations for Q1, as in the April to June quarter, that prices in the previous quarter, chrome ore prices in the previous quarter had gone up. So sort of similar in India, that because of anticipation of a better quarter, that's where chrome ore prices moved up. So it's a very delicate dance, because if you anticipate better ferrochrome prices, then chrome ore prices will start to. So the lag between ferrochrome and chrome ore is quite short. Not so like stainless steel and ferrochrome. So then chrome ore prices go up, it pushes up your ferrochrome production price, and therefore either prices have to move up to support that, or you will end up your margins getting compressed. None of that is applicable to us because we are reliant on captive ore.
Would you be aware how, for example, OMC or any other merchant miners actually price chrome ore for their customers? It's on spot or something like a monthly?
So they have long-term allocations for companies which buy from them on a regular basis, but the price discovery is through a auction process every month or so.
Yeah. Okay. So that's fairly linked to global prices?
No, it's purely demand supply and expectations of buyers as to what what they expect ferrochrome prices to be, and therefore what they can afford to pay for chrome ore.
Okay. I'm just trying to understand, obviously,
Yeah, of course.
How your strength as having a backward integration, how key that is.
So strength is the importance of backward integration is very, very clearly that we are not subject to any fluctuations. So the only fluctuation for us in chrome ore pricing will be that based on the average chrome ore price, the Indian Bureau of Mines declares the average price, and based on that the royalty on ore is calculated, right? So that's the only fluctuation for us. But in terms of raising cost and all, it doesn't, if diesel prices move up a little bit, chrome ore prices will go up, but those are minor impacts. But demand supply does not, a tight demand or a tight supply rather for chrome ore will push up prices. For us, that impact won't be there. Or when you see a upcycle and ferrochrome prices move up, start to move up significantly, that's where chrome ore prices will also move up. But for us, that remains by and large steady.
Yeah, just trying to tie up with how the carbon steel vis-a-vis iron ore works for someone who has a captive. It's fairly stable.
Yeah.
For someone who's buying it from outside, when iron ore prices drop because of a global glut, let's say iron ore, they stand to gain when iron ore prices drop. So I'm just trying to type that with.
If you are, I think the dynamics here are similar but not exactly the same. So when prices grow, when ferrochrome prices go up, chrome ore prices tend to go up as well. That does not affect us. But when ferrochrome prices fall, because of limited availability, chrome ore prices don't fall to that extent. Because
that's what happened.
Iron ore, you have multiple producers around the world, right, who are on merchant mines.
Yes.
So here, if you look at in India in particular also, the only captive mines are with us and and Balasar Alloys and Jindal Stainless. Tata Steel has a merchant mine. They used to sell ore, not so much right now. And OMC is really the only source of merchant chrome ore, if I can put it that way. So they are not that reflective of the market trend.
You said Balasur Alloy and the other one is?
Jindal Stainless.
But they have a captive
Smaller, yeah. So Jindal also has a
small,
but much smaller capacity.
Just a bit on the ethanol again. So it's only the land availability and the best utilization that does.
Yeah, because there is no question of adding any ferrochrome capacity there on account of logistics disadvantage. So what we figured is that we have the land, we have quarters, we have raw material handling facilities, railway sidings and all of that. So it makes sense for us to try and get into a somewhat related. It is definitely not directly related to our core business, but at least we have an understanding of a B2B business, which is what ethanol is. And therefore, given that it's a small investment of 150 crores, we figured we'll dip our feet in the water. And then if we see substantial value, then we will, and especially if we can, do more value-added downstream products rather than only produce ethanol and sell to oil marketing companies, then we will consider further expansion, but no other financial commitment at the moment. No, later.
For that, you have a separate team that is there.
Yes. So that is not something where which takes up much of my time beyond a review. but we have a separate lead to who's looking after the project.
Okay. The kind of logistics challenge you mentioned in delivery is regarding access to port and exporting it out.
So first of all, inland transport of chrome ore. Because Tharubali, which we should have actually had a map in the presentation, but if we have, we can put it up or something. So Tharubali is in southern Odisha. So we are about 450. Yeah, about 450 kilometers from the mines.
Okay.
So when you're moving 2.5 to 3 tons of chrome ore, whether you're moving it to Chaudhar, which is let's say 100 odd kilometers, or Kalinganagar, which will be less than 100 kilometers, the freight is a lot less than moving it to Tharubali. And then again from Tharubali port, from Tharubali to we use Vizag port. So that is not such a big disadvantage. But from Tharubali, if we have to sell domestically, that is a further logistical disadvantage compared to. So if you're selling to North India or Western India or Southern India, wherever, that's a further logistical disadvantage as opposed to Chaudhar and Kalinganagar.
Okay. So Kalinganagar, you mentioned, is about 100 kilometers away from the ore mines.
Less than 100 kilometers. It's logistically even slightly better than Chaudhar.
Proximity to our mines, the locations.
Okay.
And Kalinganagar will also give us the flexibility to, to switch. See, if you're looking at domestic sales, Kalinganagar is emerging as the stainless steel hub of India. So that's domestic sales. We are very well positioned. If you look at exports, we are right next to Paradip port. So that's an ideal facility. And Chaudhar is also very nicely positioned to cater to either domestic demand or exports. Whereas Tharubali, we were more constrained both in inbound logistics and outbound logistics.
Just one bit on the so on the board. I think your brother is there on the board, who's member of parliament. I think
That's
so.
right, yes.
So he's also involved in the business as such.
No, he's not been involved in the business since I would say 2000, which is when he was first elected to the parliament. So he is on the board. He has run the company through difficult times, and therefore is obviously a good sounding board, but not involved in the day-to-day.
Okay. Understood. I think broadly covered. Nice meeting you all.
Thank you.